Hey everyone, welcome back to another Bitcoin Elliott Wave analysis. Just to quickly recap, in our last update, we discussed the possibility of creating the third component of the triangle as we entered the lower spectrum of our targets in the region of the $88,000 to the $92,000 levels. And anywhere in between that region, we were expecting some sort of pullback, which looks like it's starting to happen. And if we swap back to the real-time analysis, that seems to be the narrative now. And if so, we have three components of the triangle completed, the A, the B, and the C waves. That puts the probability up to about 60 to 70% in terms of the triangle being the actual pattern for a larger wave X, as we previously discussed in the past few weeks. The next point of interest is now how the pullback is going to be happening and if there's any possibility of a D wave being created. If there is any sort of bounce to be expected around the upper 70 to the lower 80K regions, we can then say at that point that the triangle's probability as the pattern will increase to about 80 to 90% in terms of the probability. Now, as an Elliottian, I must remain neutral, however, and follow what the wave counts are showing us in all time frames. And I still do believe that we are going to be creating one more low before actually moving up to all-time highs, as the medium time frame gives us the best balance of probabilities, as you can see here. So you may be asking, are there any other alternatives that the low can actually be in? The answer is absolutely. Actually, it is my second preferred scenario, but it does take into account for market inefficiencies, especially for this larger wave 2 that terminated here. So if we look at this alternative scenario, we can also say that the move up, since it was corrective just like the first scenario, it may be showing us a pattern as a leading diagonal going into a larger wave 1 of a higher degree, where we are now looking for a similar wave 2 with a corrective style ABC as the minimum expectation. Now, what's interesting about this is that both scenarios are calling for a pullback. So the way to approach this is that you shouldn't be focusing on whether the future at a later date is going to be giving us higher levels or even lower levels that I'm suggesting. It's about finding the confirmation in real time. Are there any overlaps with both the bullish and bearish scenarios? And as you can see, if we pull up the bearish scenario, you can see that both of these scenarios also show a corrective style pullback into the levels of the $79,000 to the $82,000 regions as the expectation, where we are looking for not only the D wave, but also a possible 1-2 of a higher degree. So it's not about whether we're 5 steps ahead. It's more important about whether we are 1-2 steps ahead and trying to figure out whether those two scenarios are able to pull off some kind of ABC to the downside or WXY of some sort. Now, what's interesting about this, like I said, is that both scenarios are looking for a pullback. So the levels that we are looking for is anywhere in between the 61.8% or even all the way down to the 88.6%, but it is going to get a little tricky at that level. But the overall expectation for me, if I had to choose, it would be creating another ABC to the downside, as I do believe that we are still in a wave X, as that was the original narrative. Now, I'll be happy to be wrong because it's quite easy to confirm whether this is going to be invalidated or not, because after that three-way pullback, just like for both scenarios, we're either going to be looking for a three-way move up, and since we're so close to the apex of that triangle, a breakout is going to be an easy confirmation that we may just be working in some kind of impulse to the upside, and we can just easily revert back to what could be the impulsive scenario to the upside. Now, the bullish alternative, I don't like it because it's either a WXY XZ to the downside or some kind of larger WXY that terminated here, but there is a possibility that this low could be in, and I think both levels of a pullback suggesting some kind of three-wave move is happening to the downside. It really doesn't matter which one is going to be playing out. What matters is that both scenarios are still calling for some kind of corrective style pullback. So as discussed in the previous video, it seems like this whole thing is now concluding and wrapping up as the possible WXY for a wave C or a wave 1. And I think that we are not going to be, for the next few days, or at least into next week, looking for some kind of corrective pullback into that wave D or wave 2. So hopefully that was helpful. Thank you very much, ladies and gentlemen. I'll see you guys in the next video. Have a fantastic rest of the week. Bye-bye.